Hey, what's happening, guys? I hope you're doing well. I thought it'd be fun to take a look back. Let's go back to the future and see what happened in real estate somewhere around 25, 30 years ago, see where things are today, compare the two, and draw some conclusions. Was it too expensive to buy back then? If anybody bought back then, did they make money, or are they in a bad spot today? Some of these answers that we'll see from looking backwards might give us a little bit more confidence in the marketplace today and maybe give us some predictions as to where we're headed. So let's take a quick look. So first and foremost, if we take a look at the real estate rates, so we go all the way back into the 90s, looking at real estate rates, we're looking at rates that were coming off of a 10% note rate, and they were hovering somewhere in the 9, they started to drop down into the 8s, they kind of bottomed in the upper 6s, but really kind of floated between the 7s and 8s for a long time, really from about 1990 all the way until about 2001 when we hit recession. And the little gray bar that you see right there on the screen, that's actually when recessions hit. So when we take a look at those, you can see right after that gray bar, almost every occasion afterward, interest rates got a little better, with the exception of, if you kind of take a look at the screen, somewhere in the 1980 range, they started to come down a bit, but then they shot right back up within a year. And then, of course, afterward, there was a couple of years where they were high, and they started to kind of fall back in 1983. But if we spend time in the 90s and we say, okay, rates were 7s, 8s on average, what were the sales prices looking like, and what did they do after that, and where they are today? So if we take a look at this other screenshot, this is from Fred Data, and we can take a look here and see 1990, the average sales price across the United States, not just California, but the average sales price across the United States was somewhere right around the 140, 150 range. And of course, over the next decade, that number grew all the way up into the low 200s as interest rates started to kind of come down a little bit. Remember, they were up and down. They had this little like seesaw action for about a decade. But you can see that average sales price actually went up during that period of time. And here's a screen that I thought would be really interesting to look at. So if we look at this property here on Amber Ridge Way in Palmdale, it's currently listed at $300,000. And the interesting thing is this house was built in 1991. Now, if we go all the way down to this page, I'm just using a public site here, Redfin, one that you guys can access as well. This home actually sold, and you trace it all the way back to 1994, and it sold for $182,500. So somebody back at that time in 1994 would have been faced with rates that are very similar as they were today, with a sales price of $182,000. Now, today, that home would hopefully be paid off, or really close to being paid off, and it's worth about $300,000. So if somebody just kind of hung in there, I know it got a little bit rocky, it probably felt like a bad time to buy back then, but if they hung in there long enough, they actually made some money on this property. And you can tell it really didn't go backwards. There was probably a period of time during the Great Recession when the house value was lower than what they may have owed on that property at the time. But overall, over that whole 30-year period, it actually made a little bit of money. The next property we'll look at is in Pasadena. Now, this one's really interesting to me because it's a higher priced property. And I thought it would be fun to kind of see the both spectrums, right? Something here in Palmdale that maybe is a little bit more affordable, a little bit more typical. But then, what if you parked your money in something a little bit more expensive way back when? Well, this one here is on the market at $1.9 million. This home was built in 1991. And again, if we scroll all the way down and we kind of take a look at where did it sell for, we got to go all the way down to the bottom here. Originally, that property, it sold for $285,000 back in 1996. So again, hanging on to that property long enough, probably had some ups and downs, and it's probably seen some remodeling over the years, but right now it's up for sale at 1.9. That market really exploded. Pasadena is very light on inventory, and so there's a big demand to live there. Price point now at 1.9. Now, all the way back in the 90s, 286 grand would have been a lot of money to pay for a house. Might have been uncomfortable for a lot of folks, but look at where they are today. Again, buying in the right place, and we've always kind of heard that general tone, location, location, location is really important in real estate. Let's look at one more here in Granada Hills. This one's on the market at $2.1 million. It's probably seen a little bit of renovation. In fact, I think this one actually states it was renovated in 1995 and it was built in 1992, but it's on on the market. It's actually pending at $2.1 million. Let's go all the way down here and let's take a look at what that one would have sold for originally, or at least as far as we can trace it back. So if we go back in 1992, that home sold for $460,000. And again, 1992, $460, pretty expensive house when the rest of the world was a lot cheaper. But you can see where it's at today. That home has done very well. Even with high borrowing costs, the appreciation more than outweighed the extended cost of borrowing back then at that time. Now, lastly, I thought it'd be fun to take a look at something that's just a little bit more reasonable. Let's look at something out of state. So in this case, I just chose Columbus, Ohio. Didn't do a lot of research, just kind of had a filter around a home that was built in the 90s and wanted to see if I could get a line of sight on what it sold for back then and what it's selling for today. So today, this one is contingent and it's at $239,900. It was built in 1994 and it originally sold way back when, as far as we can trace it back, in 1995 for $86,758. So you can tell even those cheaper homes have appreciated. Now, of course, not at the same clip, 86 grand all the way to 239, not quite the same numbers, but not quite as bad as some people were kind of thinking. You see, if they just would have stayed in the property long enough or held it or owned it, even rented it out when they didn't want to live in it anymore, they would have gained it back and then some in appreciation. Meanwhile, that mortgage is getting paid down and there's plenty of opportunity. If we kind of go back and look at that chart, they could have refinanced several times. In fact, back in the 2003, 2004 range, you would have been in the mid fives. So you really could have shaved off a couple percent then. And if you would have missed that boat, well, you certainly could have refinanced when it was in the 3 to 4 range, in the low 2010 to 2012 range. And if you missed that boat, you would have had an opportunity to refinance it again from 2019 to 2020 when rates were in the 3s and 2s. So my point with all this is it's scary right now. I totally get it. The payments are high, the interest rates are high, the house prices are high. But they were that way back in the 90s. When we look back in the 90s, it was just as scary as it is today. But you now see with clarity that it would have made a lot of sense. It's almost a no-brainer to go and buy something way back then because we have all this appreciation. We have facts that we can tie to. We can see what happened, and so it makes the fear go away. Now, you still have to make your payment. So my advice in this market, if you can afford the monthly payment, if you feel secure in your job, if you like the area, you think the house will fit your need for a while, then go for it. If you try to wait until rates come down, I'm telling you, it's going to unlock a whole bunch more buyers, and you're going to be back in that multi-counteroffer situation. It's going to be an absolute mess, and those house prices will go higher. In fact, it's going to be really hard for you to get your offer accepted unless you look super stellar on paper, have a big down payment, or paying cash. Remember, there's a lot of cash still in the marketplace. So don't be afraid of the marketplace. Take a look at this example here, going all the way back 30 plus years ago, and build a little bit of confidence. I think if you hang in there long enough, you'll do just fine in the real estate market, even though it's really scary right now. All right, guys, hope you have a good one. We'll talk to you soon.